REIT. Singapore, I think we have 45 REIT. But right now, REIT, if you're not in healthcare, I think you are under pressure, especially retail REITs, because of the higher borrowing cost. Okay, but we just understand it superficially lah. That is, REIT, your entity now is a financial product, right? And you're traded like just any stocks, just like stock, just like you're not stock, you are just like stock. Okay, so I cannot pretend that I can give a lecture on REIT. It is a research area that I deliberately not want to go in because it got nothing to do with my core business. Okay, opportunistic investing. Now, it's very interesting. We need to understand the opportunity. All right. Now, I think opportunities are increasing. I think it's going to be more such opportunities because of the collapse of the Chinese real estate market. I think it collapsed in a similar fashion like 2008 in the US. So somehow rather a major economy, you will come to a point where your real estate market collapse. So that's like 1998 in Japan. Now, in fact, Japan has not recovered. The 1998 level, once they crashed, Japan never recovered. All right, so we are not sure whether China can produce another miracle, because when I heard from China News Asia, 60% of the Chinese development companies have defaulted. All right, so this is a very huge crisis over there in China. So now we still do not know what will be the impact to some of the regional countries here. All right. Now, but on the surface, Indonesia is doing much better than the previous crisis, much better than Malaysia, much better, right, than Malaysia. All right. So my eyes are not on Indonesia, but I suspect Malaysia will once again present many opportunities for our investors here in Singapore. All right. So, but first of all, we need to know what are opportunity. All right. Now, buying into properties from owners in financial difficulty. Now, I don't want to go so far to China, okay, because China is a totally different system that I don't know, never studied before. I only want to talk about Malaysia. Malaysia maybe, right? So either there are properties needing renovation, upgrading, or repositioning, right? The key is to understand this. Number one, not everybody will know that this is an opportunity if they are not in real estate. All right, if they are not already an investor. Because why? Because now you understand that the price represents a discount. Like I always ask this question, but today I haven't asked. How do you prove that a price is cheap? How do you prove that a price is cheap? Let's say you understand a property, it has been trading at, the nearby property all selling at $2 million. Every unit more or less $2 million. Okay, slightly up a bit, slightly down a bit. Okay, it's about median price is about $2 million. And now your owner is willing to let go at 1.7 million. And then the buyer is telling you, I think the prices are going to come down some more. So how do you convince them that at 1.7 this is a cheap price? All right, okay. Now, so of course the answer is you use the gross yield, right? You use the yield to say that the yield used to be only 2.8% or about 3 in this project, but right now the yield is 3.8 to 4.2%. All right, so the yield has gone up. So rental yield is still a very, very important topic for us to teach. All right, so now the ability to buy at a discount. So you understand the opportunity is because you understand that this is a discount. Number two, all right, knowledge. You have the knowledge to upgrade, to modify, to reposition the property. Example will be from office to shop, or to acquire more land, and then you also know how to exit. And not holding from a very low price, go up, then the price come down again. All right. Okay, so exit, how to exit. So very quickly, I show you in the aftermath of the Asian currency crisis. Now, the currency crisis is 1997 to 1998. These 2 years are Thailand collapse, Indonesia collapse, and Malaysia collapse. And then of course Japan, Korea collapse. GIC in year 2000, Sunway Property, the owner is Jeffrey something. I cannot remember his surname. Jeffrey something. But they all just call him Dato'. So Dato' actually came to Singapore to pitch to GIC to say that, would you be interested to invest in my property? All right. Today they are back again, on top again. So now GIC bought 48%. You look at the price. It's only 182 million ringgit in year 2000. 10 years later, they REIT it. That means they turn it into a REIT. It's called Sunway for 2.13 billion. So that's almost 10. That's almost I don't know how to count it. 10 times. Almost 10 times. Almost 10 times the profit. So 48% is Singapore's. Okay, so quickly move. 5 years later, then they bought the Hotel Arms. All right, this time round slightly more expensive. 170 million, and then they also REIT it for less than 700 million. So this one not a fantastic kind of profit, but nonetheless it was a profit, right? So selling to REIT, that means now the ownership is owned by the trust itself. The so-called sponsor, the original owner, probably just own substantial share. That's it. All right. So the trust actually own it. So therefore, it is an exit strategy. All right. So the opportunity is this: you are still partnering with a local partner. All right. But of course, if you are buying over, let's say a shop house, for example, let's say now you're buying over a shop house at maybe 60% of what it was bought and sold in the past, then you probably don't need any local partner, because you know Singapore. And then after that, you retrofit the property, and then you actively manage the property. Now that is called opportunistic investing. And I suspect the opportunity will come in the next 18 months. I'm very sure. If China real estate market never collapsed, then I wasn't sure. But right now, I'm very sure. All right. So for Sunway Property, they actually bought the nearby land, and then they added to the floor area. All right. So now, right now, GIC only hold 5%. Okay. Now, so this particular investment represent arbitrage, improvement, and opportunistic investing. Okay, let's move. This one